What's up, guys? Just give me one sec. Where's the chat? Let me find you guys. There we go. Cool. All right, what's going on? How's everybody doing? It's late where I am, so it's like 8 o'clock New York time, but finished with the day. Not really interested in anything right now, and felt like, what the hell, I'll hop on a stream. What's going on, everybody? There's not many people in the stream right now, so I know that this might be an odd time for. Normally we do a stream earlier, but we haven't been doing streams, I guess, frequently enough anyway, so it's good to see some new faces, though. Okay, what's up, what's up? Chris with the beard. Good for you, Chris. We like beards here. Barack, Cornholio, Colorado sports dude, what's going on? B-Town, Paulo, Cornholio, what's up, man? JS, hype in the chat. Pouncing penguin. A pouncing penguin, huh? Penguins don't look like they're built for pouncing. But I dig it. Crypto Sam, what's up? Cool, guys. Can everyone hear me nice and clearly? Just give me a sound check and we'll get it going. Looking ugly right now. I think NFTs are fun. It's different, that's why. And I'm a pure trader, so I'm purely a technical trader, and it took me a while to warm up to NFTs, just because I knew it would be sort of such a there'd be such a plethora of garbage very quickly, since you could basically just make your own NFTs. Whereas it's a little bit more difficult to list an asset. But that being said, what the market values is what the market values, and we've seen a lot of really awesome projects come out of the space. Seen a lot of things that make you scratch your head, but hey, that's art, right? Beauty is in the eye of the beholder. Okay, cool, loud and clear. All right, so yeah, I figured I'd do a late night stream. Had our nieces over, had a sleepover last night, did a bunch of shit during the day, took a few trades, but I don't know, it's not looking that attractive to me right now. We're smack dead in the middle of yesterday's range, so if anything happens during the stream, we'll go ahead and take a trade or two, but yeah, we'll do a late night stream, go over Bitcoin, go over some alt pairs, Avalanche ecosystem a little bit, talk about the 1-inch news that just hit the wire, hit the Twitter wire, as in tier 10. So DB or tier 10K, breaking news. He's like the more curated crypto version of Walter Bloomberg. But we'll get to that in a second. As a reminder, none of this stuff is financial advice. This is strictly for entertainment purposes only. Want to thank, obviously, our partners, Phemex Exchange. We've been partners with Phemex now for going on 2 years. And if you're new to the stream, my name's Ryan, also known as Cantor & Clark on Twitter. And myself and my partner, Josh Rager, are the co-founders of BlockRoots. Okay, so it was pretty funny yesterday. So I shared, obviously, picture of my office, and caused a huge stir because I'm blocking the window. Not for nothing, things like this I really don't care about. It was really funny though to see the emotions that it the responses that it got. It's easy for me for the wires over here. Of course, I could change everything around. I wanted to have a picture on the big wall. I get really good lighting either way with the window. It's a big ass window, and if you saw my computer setup, that's a big ass window. And I just like the way that it was set up this way. And you get people that come out and they're like, that's not feng shui, that your computer should be on the other wall. And on the subject of beauty in the eye of the beholder, right? I set my office up, believe it or not, how I wanted to. So regardless of any kind of form or science, for me it was about function, and it works out this way. And then my carpet got hate on too. It's a fucking simple carpet. It's not a Persian rug, right? And it's apparently too big for the room. But again, that leaves out, one component, which was me deciding that I wanted to make sure that when the chair rolled, it didn't go off of the carpet onto the wood, off the carpet onto the wood. I wanted to have it, something that could go throughout the entire space of the room. So it's just really funny. It's something that happens. And I posted a picture of my new monitors, okay, on our kitchen island. And I was posting it honestly, like smirking while posting it, because I was like, someone is going to, I'm using the word like too much incorrectly. Someone is going to say something about either the, whether or not they're not 4K monitors or the gigahertz, whatever, okay? Something about the technical aspect of the monitor or the tech specs. And no one did, right? People were critiquing the hood that we have built in that goes under the cabinets. And we bought the house the way it is anyway. It's not like we had everything custom built. Either way, it was just too funny because there were only, and this just shows you, there were only actually a handful of people that had genuine questions with regard to the type of monitor mount, the type of monitors, what was on the actual screens in the picture. So you could tell who's really seriously interested in trading and who is kind of just here for the entertainment, which is like 9 out of 10 people are here for just talking shit on Twitter. That happens though with anything. If you're gonna post anything, a picture of your outfit, it's just, that's what it is. Anyway, I said hi to everybody. I said hi to everybody. I think there's maybe one more person in the chat. X Factor, Jupiter, Carlos, what's up? Yeah, I entered decoration Twitter. Exactly. Everyone's a critic, right? Everyone knows what they're talking about. Okay, so let's go to the screen real quick. So I just briefly mentioned this. So 1inch Network looking to raise a Series B at $225 billion. Not 225, $2.25 billion. So this is interesting, right? Looking for investment money. Series B, obviously Series A, Series B, Series C, venture capital after seed investment, after angel investors, after essentially the first circle of investment, looking for outside public money. Outside private money. Still in the private domain. So this is interesting, right? We're seeing more crypto native companies, protocols, platforms go a bit more mainstream. And it's not that it's mainstream. Let's just say go a little bit bigger beyond just the what falls under the umbrella of everything we're familiar with. We've seen what's it called? Andreessen Horowitz. We've seen some big venture capital players in the space get their tentacles in the space. A little redundant. Get their tentacles in projects, right? And obviously, I think that this is a really good sign. I don't really care about, just to cut to sort of the meat really quick. I don't care about. For a second, I almost had a little panic attack. I didn't know if the sound was on the screen because I didn't see myself. Where am I? Just pull me up. I don't know where I am. I don't think we need me on right now. That's okay. Either way, you guys can hear me. So this is a good sign because throughout the whole ranging period where we were moving sideways for 2.5 months, we were still seeing large investment like this come into the market. So this is a great sign no matter what, no matter where you are within market structure, regardless of what's taking place. If we continue to see large scale, this is not, this is them looking to raise money, but if we continue to see big money come into the space like this, it's obvious that, there is no need to worry that much right now about, macro top. There is no top. I make that joke. There are sort of intermediate term tops throughout what is probably a much longer sort of secular bull run that will maintain, and you'll have sort of this positive drift over time, the same way that something like the S&P 500 looks, where maybe there's less of this obvious cyclicality with how crypto's been since the inception. Now that outside money's come in, now that we're seeing larger players come into this space, it'll take on more of a correlation to traditional markets, move like more traditional assets, same sort of accumulation patterns, and I think it'll continue to develop, and this is just a really good time, right? I hate to drown on too much about this kind of stuff because it honestly doesn't interest me that much as much as what price is doing, what buyers and sellers are doing in the tape. So just look at BTC right now. Obviously, just took a spill as we're talking. Again though, we're still within. We're just breaking outside of yesterday's value right now. We just closed. We saw a significant move after the close. Okay, so we're looking at the session split right here. We had a very brief move to the upside. Let me change the ink on that real quick. A very brief move to the upside followed by this spill. And as you can imagine, after this daily close, there was probably a good amount of sort of systematic sell pressure that came into the market. This is a bearish engulfing candle. I don't, you guys know me. I'm not like a TA guy. Some people mistakenly call my style of trading TA, but using order flow and using profile and paying attention to positioning, these are all technical factors, but from a pure TA standpoint, when I say that, I mean like chart patterns and certain candlestick types. And obviously what you're looking at with the development of a candlestick is how strong the market was, one side was able to impose itself on the other. So clearly, if we've had a period of ranging up here, price has a significant move to the downside, retests a prior resistance, acts as support briefly, and now we have a candle that essentially, engulfs the entire day's progress to the upside, then yes, it's telling a very one-sided story that bears are, at least in this time frame right here, they're in control, right? Or that maybe bears aren't overpowering buyers as much as maybe buyers started to get again a little bit hot towards the highs, because for the last two streams, going back to this move up above 48, we were saying, okay, now some of the first signs that the futures market's getting a little hot. We started to see futures trading at a little bit more of a obvious premium to spot. We had, in some cases, Bybit getting, chomping on the bid a little too aggressively, coming out with like a $75 to $100 premium to spot, which is, during a major run up, that's kind of the norm. But again, it's a matter of where that takes place. And I think the fact that took place in the higher time frame resistance is pretty significant. So underside of this structure, major contextual level, sort of high participation zone, 50K, major psychological level. And that's where we're at. This is where you would expect resistance. This is, from a contextual risk reward standpoint, a better place for shorts and sellers to get involved, period. Right? Because the invalidation to this is so close. Reaccept back within this range low, then you're looking at, yes, a much more obvious move upward, and we would expect that buyers would get aggressive there. But right now, you've seen a very sustained move from the lows. You're coming to a major level from a distance, cooling off on the way there, and starting to see that, spot was sort of dragging its feet a little bit compared to this futures market. So after a close like this, so after a change in market structure where you do have a close like this, it's a very bearish close. Once you have that close, you're sort of engaging traders that are trading just on the behalf of maybe certain signals like that, right? If you have a change in market structure, if you have a loss of a prior daily low, same as to the opposite, right? A gain of prior day's high. There's going to be a lot of systematic traders that will be acting on behalf of that new information. So you'll see very quickly, it often will lead to a sharp move after the close. But one thing I want to mention is we are still, and just to pull this down because it's on another screen now, we're back within right now. We're not back within. We're flirting around. Just really yesterday's range, right? So this is the third test of this low. It doesn't look good, but the point that I want to highlight is I wouldn't want to get overly aggressive at the lows if I was looking to short, just because there is a potential after a close like this because there's sort of that one-sided expected activity, meaning sellers at the lows getting involved because of that change in structure, for a trap to set up, at least initially. So while you might have a continuation move on your hands, right, where you have something, say for example, like this very obvious break occurring, and you're expecting a move down, I just wouldn't expect that you would get it without some type of significant throwback that leads to, a lower high along this structure before moving further down. So just be careful, because when you have a daily move through a level like that is obvious, that brings a lot of people into the market, it is always sort of a prime candidate for a trap to be set up. All right. So that's where we sit on the low time frames, and the high time frames. I think I said that backwards. On the high time frames, looking back at the low time frames also though. 50K level. Next level that's obvious is 44.5, 45. Next area of market structure, this pivot low right here. The most significant level on the weekly, as we said, is all the way back down here around 39.40. It's not like we would want to come all the way back down to there, obviously, but it's just worth pointing out. In bullish conditions, okay, we would expect to get front ran at any significant level. So I would just say, obviously, there's always a little bit of nuance, right? We want to be looking for some type of development in market structure that gives us an indication that there's strength, right? That bulls are starting to take levels back. For this kind of structure, for any kind of swing, I do like to keep it kind of simple, because after, for the last couple of days, we've had, a period where value has moved lower. So we had this sort of soak at the high, trap at those highs, price moved down, all right, value established lower. In the effort upwards, most of the value at the high, right, most of the volume at the point of control, you want to continue to maintain that level if you're going to look at least to the upside. And instead, we have this very swift move to the downside, and we're still establishing value lower, value migration lower, volume being established, volume transitioning lower, okay, with no immediate response. So, if it's a very bullish market, we should see that the market responds very quickly to any kind of discount. So we haven't had that yet. You've had more of an acceptance down here. So bullish setup for me after a structure like this, because we've had this sort of ranging behavior at the highs. If after it looks like we've had some kind of a transition to the downside and we've soaked down here enough, if we start recovering where most of the value has accrued down here, then I would look for, very, very likely a fast move from around 47.4, sort of the ledge right here now where we were recently rejected, back up to these single prints around 48.2, 48.6, and then look to sort of establish positioning after a response up there. I think from a high time frame standpoint, it's very clear that 50K now, if we just look at this on sort of the 1 hour or the 4 hour, even something like reclaiming this high over here, that's obvious, right? I feel like saying that sometimes it's like, okay, yes, obviously if we're trading higher and retaking this level, then it's very bullish. But you might get people that anticipate maybe a second sort of run at the highs, a second fake out. My point is that if after this activity at the low, sort of retesting this previous level, if we're trading now back above, 49.5, edging on the level of 50, I would just expect that this is probably going to run up further, right? That we're not looking at a double breakdown in the making, or rather, another failure at these highs and a move lower. Where we sit right now, though, you do have some pretty gappy activity below you. It's not necessarily a gap, right? We do have a single print structure right below us. Okay, so you do have a single print down to 45.900. Right, so that's one area where the market moved right here pretty quickly through. But, that is pretty much to right. That's right within this level right here. So if we're looking at a 30-minute candle, it actually will be a little bit more truthful. Okay, so this is your gap, right? That's your single print area. So not for nothing, in a trending market, you would expect that if in a fast-moving trend, price was to come back to the single prints, this would be a good area to sort of get involved. Like I always say, a significant level that we look to in advance, a lot of times you're usually going to get that first response. So it's a matter of, do you have conviction to hold this for longer for a swing? Because you're likely going to get that first response. You're likely going to get a few taps into this void that do offer some type of meaningful bounce. What we're looking for, what most people are looking for that are not just trading low time frames. They're looking for some type of development, right? To sort of increase their optimism about some type of move to the upside, or at least help them get behind a long, or assume that, or rather come to the conclusion that the long is maybe a bit more high probability at that point. If we hang around this area, right, if we continue to drift lower, then I would just anticipate that these prior lows are a target. And ultimately, I would expect, 45K is kind of a bullseye. But as you can see, we've already had a pretty nice move off of this level. Let's look at this real quick. So a move right now from value outside of yesterday's value, you're still just ranging, really. It's really just a continuation of the prior day. If we look at the daily now, obviously it's going to make you feel a little bit more. Hold on one sec. If you look at the daily, it's going to make you feel suddenly like, you have maybe reason to be a little bit more confident, but you have 23 hours left, right? So this, going into Friday, going into Jackson Hole, another thing that's really, I think, important and at times prescient is, we have a pretty it's nothing major, but options expiry tomorrow, right? So if we just look at the notional value of contracts, it's $1.7 billion. A lot of that open interest is around 50K, 51. So if we look at just that expiry, end strike, we could see that there's a substantial amount of open interest at 48, and we also have 47, right? If we just look a little bit further out to next month, see that 50K strike has a ton of interest. So, not for nothing. People who bought calls looking for some type of upside, right? Some type of leverage exposure via options and no, path dependency. You have to imagine there's someone on the other side of that option, right? Your options writers, your market makers. And as price gets closer to that level, right? There are those gamma effects, okay, where ultimately your options market makers have to buy the asset to cover, right? To be hedged. The thing is, obviously, if that's going to go into expiry and there is and it's not expiring in the money, and we're close at this point where, market makers or writers are hedging, then they do have likely inventory that they would probably, I don't know if they would get rid of it, but you just have to, take that into consideration. If we see, continued weakness at this level and options market makers at this point, let me move this over so you can see it. Options market makers, have picked up a good amount of delta, or rather have picked up a good amount of the underlying spot to be delta neutral, to remain hedged for those that have sold calls, then, there's a possibility that they would be a form of selling pressure when they reduce that inventory after expiry. I think it's always useful to know when these large expirations are. They're just all of them are becoming important now, right? Options market is growing, so I think that it's going to continuously be an important factor in the market, and if anything, I think over time it'll probably be one of the most important things. So let me just look at, mixed feelings right now about funding. Funding sort of on and off. If we look at Bybit, Bybit at one point earlier this morning was negative, went up to 6 basis points, now at 5 basis points, predicted is going back down to 2 basis points. I would say it's too close to call, right? I want to say you should err on the side of caution around high time frame resistance. So, if the market right now starts reclaiming prior levels, then you can make a case regardless for some type of trap positioning. So, the idea is we're looking at, funding. We're looking at that interest rate component. Hold on one second. Let me just make sure you guys can still see this clearly. We're looking at that interest rate component to really gauge, whether or not one side of the market has been more aggressive than the other, and then therefore if price is holding up in the face of their aggressiveness, if they're trapped or setting up for a trap, that still requires price to start trading back above previous levels. So for me, it's obvious that the previous level is, above where most of the value occurred yesterday. And then you have at this point some type of trending structure, B-shaped profile, B for base, like I say, or like is said, right? That's a common sort of way of looking at certain profiles. I don't like to get into too much of day types and profile shapes besides just purely a balance versus imbalance standpoint. But again, funding when it persists in one direction can be pretty telling. It's been on and off, and I think it's because when you are, and I said this last week, when you are at these extended levels, you're getting the market like kind of longs really want to be in that position before Bitcoin has some kind of massive move, and you have shorts right now that are going to get more aggressive at any kind of sign of weakness. So I think it's easy to see when the market's a little bit thinner and when there's more aggressiveness back and forth, that funding really start to sway. I pointed this out. This is maybe a little bit more telling if we look at the open interest to market cap ratio. So it's a pretty good way of taking out, not taking out. I mean, I've said many times before, I like to look at funding along with open interest. Funding persistent in one direction, is open interest going up with that? Okay, we have a better case for some type of trap positioning because it's new business in that case opening, versus funding being persistently negative and let's say open interest going down. Then it's like, okay, maybe there's not a lot of liquidity right now. It's hard to sort of provide a bid, but open interest is going down, funding is negative. Might be the first signs of the market shifting and sellers gaining control, and it's longs closing out, right? So that open interest is dropping. It's not necessarily shorts opening up. Obviously, there's a lot of nuance to this, and you can't be right all the time, or maybe even a majority of the time. But hopefully, you size accordingly and manage your risk for the times you're wrong. But anyway, looking at the open interest to market cap ratio, which is showing you, based on market cap, how much open interest has gone can give you, in comparison to market cap, large changes in open interest can be an indication of a lot of leverage in the market. So, for example, when we have, moves down, so right here, and right here, moves down that occur on an increase in open interest. Hold on one sec. When we have those moves down that occur on an increase in open interest, we could make a case for potentially shorts getting caught off sides at that point, right? Because market's moving down, you have an increase in open interest, that open interest to market cap ratio is increasing. That leverage that's coming into the market could very well be in the form of shorts opening. So again, just a way of looking for sort of traps and maybe positioning on the higher time frames. Does this all make sense, guys? I'll just look over the chat in a second. Let's look. I mean, I don't think that, I hate to go too much or to give too much weight to sort of daily closes. It's think about it, it's kind of arbitrary, right? It is significant because, again, you're going to have a good amount of people that might be acting on behalf of that signal. But I think you have to, one of the most important things to do that I always say is very useful is zoom out so you get a better resolution view of where the market actually interacted. So if we're looking at, let me just get rid of these session lines. If we're just looking at this zoomed out, look at our trend, right? So we have the 20 period moving average. So sort of a line in the sand for bulls and bears. This is the 20 period on the daily you're looking at. Coming back to it right now, acting temporarily as dynamic support. You definitely don't want to see it hang around any kind of level that you're deeming as support. If we look at just the volume profile, coming back to what was sort of the meat of this prior range, the high volume level, but still mainly hanging out around the prior value area high of that entire structure. So if we look at, I think it is, let's put this on. If we look at this and just extend that forward, you're still kind of at the top side of the previous range, right? These two moves right here, these were fairly thin. So you could tell, you have a bar pattern right here. So pretty gappy, thin move up, squeeze, long squeeze right here. So not much took place within this little space. Same thing on the way up, right? It's like this gap, extending that forward. Price moved through it the same way, and very quickly again, we had a cascade down. So majority of the time was spent, the value area high rather, was around 46, 7, not the majority of the time, don't mistake my mistake in saying that, was around 46, 7 area. So point of just going over that is it's a meaty area, right? It was previously. So we would expect that, it would do its job on a return to it, but, right now we're sort of 1.5 days, or excuse me, we are 1 day into sort of hanging out at the top side of that structure. I don't know. Part of me does not want, not shorting. I reduced spot, added spot back twice since we've been in this area. What are we listening to? This is, oh my God, this is my wife's playlist is on now. My wife might be listening to her. This is going to get us turned off. No, it's not showing on her phone. It might just be shuffle. So that is actually Lady Gaga that came on. And that is from the movie A Star is Born. But that's a great soundtrack, by the way. Let's put back on that playlist. Anyway. Oh, nope, she's trying to listen to it. Okay. I could see that she's... so the Spotify that I've hooked up, we just have one account because between the cars and favoriting songs. I know. Make fun of me all you want. But anyway, no music it is. So, I don't know. The way I'm looking at this right now, I mean, there's been a lot of selling, it seems, in the last, last 12 hours. It seems like sellers have been pretty aggressive, but haven't stuck in the knife. So if I was going to say, gun to head, what I think is going to happen, I think maybe we have some type of further attempt through these lows, and then we have some type of squeeze upward. To me, it looks more like that. It looks more like maybe shorts are setting themselves up for at least a short-term squeeze, a little bit more than what we've had within this range right now for the last, under 24, over 12 hours. Funding predicted going more towards neutral, right? Briefly above, Bybit, USDT margin, 5 basis points, was around 6 basis points, going back down to 2. We saw OKX negative most of the day for token margined and coin margined. Bybit periodically negative on coin margined. So all of this, right, and price still here. I think, obviously a better trigger would be, considering the amount of time that we've now spent around the center of this structure. You have the point of control right around 47, VWAP right around 47.3. I think it's obvious at this point, if we trade to the upside above this range, I would say even, I don't want to call it now, but we've had sort of the initial move lower, spike low, took out that low, and now we've had another gun down there. If we're starting to trade back above the point of control, I just think maybe we have a little bit of a squeeze ahead of us. And who knows where that goes, right? We have the weekly VWAP right now that's around 48.4, and we have those single prints that are right around there too. So I think that that's a good sort of target, and if you look at this, if we looked at this as a double distribution, we look at single prints as an area where initially they should act as resistance on the way down. Just looking at from the left, we have these single prints right here. If this was a trend day and this is a true trend day where you have, value accruing lower, you range for a short period of time, and this acts as sort of a hood for price, and price shouldn't be able to very quickly trade back above where most of this activity occurred. So if we trade back above the point of control now, you do have those single prints still there, but I think you're probably moving up to the next set of single prints, which are lining up with, the weekly VWAP, and just in terms of an area market structure, there's really not much. It's kind of just this little previous flip right there, right around 48.4. So a little bit of confluence, but you know, that's initial target if you're just thinking of first sticky point. I think if you have this type of correction though, right, you didn't have any kind of blow off. This is kind of a rollover. If, you know, price is now trading higher again, I just think that the likelihood is, you know, you're probably going to make another effort at least up to 50K, right? The move that we've had off the highs is pretty docile, right? It's a rollover instead of any kind of major rejection. You know, price had been accepted up here briefly, but looked like it got absorbed, and you know, once price trades back below where a fair amount of activity comes in, it's very easy to have a spill. But it's not like there's a lot of, I don't think there's a lot of leverage in the system right now, so I don't know why we would have any kind of major issue where things got slippery. You know, Bitcoin is unique. I mean, it's, once it starts going in one direction, it's kind of difficult to stop it unless someone very big comes in. You know, shook off a lot of FUD recently. Equities, as long as they continue to move up, you know, BTC should act like a higher beta S&P, right? But we'll see, right? After Jackson Hole, we'll see. Does anyone have any questions right now? Otherwise, we'll go over some other stuff. I mean, there's some absorption if you look at, you know, you could look at the CVD, for example. Instead of XO, I'll just go to, you have some absorption that stands out on Bybit, right? So we'll go to coin margin, see a bit more activity picking up in those. We'll just isolate for Bybit and just point out this absorption that I'm talking about. So if you look at sort of how this range painted from left to right, all right. Okay. From the left to the right, from these lows, you started to see that, you know, price was making lower lows in CVD, right? And a little bit more obvious over here, you know, we didn't really have to justify these higher prices. It's not like CVD was really following. So you could say, you know, minimal effort on part of CVDs, price was able to move higher because let's say we had a pretty strong bid. You know, maybe liquidity was being pulled higher, easier for price to move that way without much effort. You know, spot moving still with relative strength. But again, signs of absorption, or rather, if anything, signs of more selling than we're actually seeing show up in the chart. That being said, you know, if price continues to move lower, CVD, it's showing us that there's an interest in selling, and if price is following it, we can't really say. You know, with CVD, I like to see a very obvious divergence, right? So I really would prefer to see, you know, we're looking back at something like this, which is over already, where you have, you know, very obvious lower low, and it's within kind of a close area. I don't want to like look at a CVD divergence, it's painted out over a couple days, or it's mostly with, you know, with regard to price action, it's within close proximity. So, I mean, if we look at these lows right here, then I'll just clear that up. If we look at these lows, right, relatively even lows, you know, you're pushing it a little bit, but we know already that the sellers are getting aggressive because we see these, you know, high conviction moves to the downside, and again, no follow through. And what's happening is, obviously, you know, a lot of you already understand this because I talk about this frequently. You know, when you have a clean range like this, what the hell is that? I don't know what that is. Oh, that's the stream key. I was like, what copy? I just hit copy and paste by accident. No, this is not my private keys, guys. That's the stream key. So when you have a very clean range like this, you know, what you're doing is you're accumulating sell stops, right, and buy stops. You know, sell stops for any of your longs that are getting into position. They're like, okay, I'll just place my stop outside of this range. Sell stops for any kind of market short looking to be entered into the breakdown, and the exact opposite at the highs. So we haven't had a major fake out since, I would say, down here. So major meaning take any kind of level. The fake outs are significant because if you had, let's say, a big break above here that fell back within the range, what happens is when you take one side of those stops, let's say you enter in longs into the market, you stop out shorts, When you stop shorts out, you take a buyer out of the market, right? So there's one less buyer below, all right, because they bought back already. When you enter a long in the market, you enter in a new seller. So if you take out short stops up here, if you open up fresh longs with OCO orders to sell, if price falls back within the range, it's easy to move from, at that point, it's easy for the fake out to move back in the opposite direction because you have that sort of dynamic taking place within microstructure. It's kind of like a very, it's just sort of the mechanics of what takes place based on those activities occurring, right? It's on the presumption that some longs are going to place stops right away within the range, and that obviously shorts are not just going to immediately get re-involved on the long side and buy when price is coming back down. The exact opposite obviously can happen to the upside, right? We have a bunch of sell stops down here, fresh for any kind of breakout short to close out a long. So let's say we stop those out and rip back up within here. Well, when you stop out a long, you have one less seller ahead of you. And when you open up a short, you have one more buyer ahead of you. So when you have these fake outs after very clean ranges like this, once price fakes out after having a very clean structure, right? Not just talking about one pivot high, one pivot low. It's very easy to, once price accepts back within the structure, back within what are the very clear boundaries, for the market to move very quickly in the opposite direction. So that's something that's always worth noting. Yeah, so I mean, we could see something like this pretty shortly, even though we didn't really have a probe of this low, you just had this low taken. Same thing works with liquidations. We talk about why the market is easy to move after liquidations. Well, if you've cleared the liquidation engine out, if you've cleared half of the market out with taking out longs or taking out shorts, you've just made it a lot easier to move back in the opposite direction with minimal effort. All right, so let me just look at the chat real quick. Some of the AVAX pairs or Avalanche pairs, so just to go over some of these that, I got in some small caps. So just to remind you guys, these are low caps, right? So Gondola, for example. Gondola went through a big drawdown, a long accumulation period. I don't even know what the market cap is of this yet, right? This is just a punt, right? Just being completely open. This is a punt. If you try to buy into this, you're going to make the market go up, right? When I put my position on, I think I caused like a 15% move in price. My belief is right now that these low caps, right? I don't care about the fundamentals of this. I just care that it's a low price point, so it's under 2 cents. I care that it's a low market cap. It's got a question mark now as a market cap. And that has a psychological impact on buyers, right? So during any kind of euphoric phase, during any kind of mad rush to another ecosystem, going Uniswap and then Sushi Swap and, Solana and now, Avalanche, it's pretty indiscriminate buying, right? So I just want to be positioned in what I think people are just going to throw money at, okay? I'm making no mistakes thinking that this is, the next major thing. This, Pangolin, this is the DEX, right? This is like the Uniswap. Joe is like the Sushi Swap, as people have said. But all of these also, after having this long, prolonged period of selling, during a major market lull, during Bitcoin, making strong efforts to the downside, 29K. And for them to maintain these levels, I think is significant, right? I think a lot of smarter people were accumulating this, expecting what is likely to come, in my opinion. Another thing about the ecosystem is it's sort of difficult to access. So the thing about that is the more difficult it is to access, the harder it is for money to obviously get in, right? But also to panic and get out. So that's another thing. A lot of these are still yet to, and I know I'm not like charting these up because these are just, I'm building positions in these based on the idea that a lot of money is going to come into this, not based on any major technicals. So it's not like I'm looking at this and I'm saying like, if price rejects off of this level, like it's no more of a hold for me. What I think happened with my own trading, I did really well during DeFi summer, but I traded a lot. So I traded a lot Meaning, Josh and I, we were sharing SNX when it was under $3. We were sharing Aave when it was, $20. We were sharing all of the major pairs. Solana when it was $2. Okay, we were sharing all these constantly, talking about the levels and the trade setups and the importance of having a sort of a suicide bag, right? And I traded them too much. Where, honest to God, for a lot of those DeFi pairs, I underperformed with those pairs. I don't want to say I always, because no one has a perfect track record. Going to go through periods where you don't. But I outperform BTC. That's why I trade BTC. I outperform what I think is a good index representation or benchmark for the market. With DeFi pairs that go up, 50x, I'm not going to outperform them by trading. So with Avalanche pairs, I want to position myself in what I think is going to attract a lot of capital. You have, $180 million. I forgot the exact amount of money that is looking to be deployed. Part of that incentive, I forgot what the exact program is, but it's an incentive, right? To participate in the ecosystem. I'm pretty sure. I have to double check that. Like I said, I'm mostly just trying to ride what I think other people like. It's a Keynesian beauty contest. I don't really care too much about the details. I care about other people caring about them and doing my homework for me. So this is like the Uniswap. Joe is another one that is like the sushi swap. All right. I don't want to hyper focus on these charts, right? Meaning in my Joe position, I wouldn't be surprised if I woke up and we had, a 50% pullback, right? I'm looking at this on the wrong chart. Let me zoom. Let me get into like a 1 hour. Here we go. If Joe came all the way back down to 20 cents, I mean, that's an 80% pullback. That's a lot. I don't want to say that because that's kind of like allowing for anything. But if you see a 20% pullback, a 30% pullback, I mean, alts pull back a lot more than that. But I think you get the idea, right? I think that's going to be short-term noise to what will be a longer-term trend for the next, let's say, month and a half, 2-3 months. So these are all very interesting pairs to me, and I'm positioned in them. So, I don't want to go through all of them. There's a few other ones that are smaller that are, Gondola is a small one, but I don't want to go too much into the small caps. But I put, money in them that I'm willing to lose. And if they go up 5-10x, that's great, right? Let's look at BTC again and then take some questions. I mean, nice bounce off of the low. Actually, when I said hold on 1 second earlier, I picked some up down at around 46.5. So actually, I'm pretty happy right now looking at this. So I just added spot. I didn't take any futures position, but I just picked up some spot. FYI, Phemex is still doing up until for the next 10 days, up to $2,000 bonus for signing up. So, if you deposit a certain amount, you're going to get less than that. But if you deposit up to 2 BTC, they're just giving it away, right? There's no, gimmick. There's no catch. They're just giving away money because right now there is, there's a lot of capital looking for a home because of what's taking place with Binance, and people still do, place value on having some form of access that has a, no KYC. Phemex does offer KYC now, but you can, you can participate in the non-KYC Phemex. You just, obviously, you're not going to get the incentives that come along with, doing the KYC. Yeah, nice bounce, right? So, questions. That is very nice. Okay, very happy that I actually took time to grab along. I really wish I bought futures as well. Whatever. FTX, Binance. I mean, my background originally was trading equities. So KYC is the whole way that crypto is, and I have to make sure that I don't let it rub off on me too much, is very cypherpunk, stick it to the man, don't follow the system or don't adhere to the rules in the system, and that's just not going to work when you're trying to become an accepted asset class. You're not going to. There's no revolution there, right? They will get involved. Traditional players will get involved. They will very likely impose their will on us. If you want to be adopted, that's the way it works. Big asset managers, they don't want to get involved in assets that they don't think are regulated. They don't want to get involved on exchanges that they don't feel are regulated enough. So, especially just think about not just retail, but your funds, your, bigger whales that want to trade on FTX. They want to make sure that they're on a squeaky clean exchange, right? So FTX can attract bigger money, and sort of play in a different pool by being KYC. But my point is, this is just normal. This is only abnormal if your first market is crypto. There's times when I think, where would people trade if they, and it's funny because it's like, this is where I traded. Where would people trade if they couldn't trade on these exchanges? And it's like, well, the CME. But then, no one wants to trade on the CME, right? One, obviously, is different margin requirements. It's much different, right? You can't, 100 times leverage with 1% margin. But yes, it is following the path I just drew. I wish I tagged along on futures, but I picked up some spot. Let me just see. Where did I actually buy that spot? Hold on one sec. Order history. Okay, so I actually bought at 446 639. Oh, so it's kind of right around where I drew it. Yeah. So, yep, cool. I don't want to dox it, but yeah. I'm looking at the screen above me. Got to be careful sharing certain exchanges and certain details. Anyway, no LARPing though. I think you guys believe me. Hopefully you do. Let's see. Let me look through the questions. Okay. Oh, you know what I could do? Hold on one sec. Aha. I could sort of hide it, but sort of show you. So I just marked it in right there. Okay, I want to drag this so I don't show my exchange. I don't think it's going to show anything out, actually. All right, here you go. There you go. Can you see it? Yeah, right? Okay. So I just picked up that was some spot BTC with Tether. That was, wow, look at that, ripping. I don't like to, if I'm scalping, I market buy a lot of the times, and try to limit out and scale out. It all depends. For certain scalp ideas or certain setups that I take that are very order flow based, you don't really have a chance to use a limit order. If I'm using a limit order and getting filled, I'm probably wrong about the idea. If I'm attacking a setup, yeah, 9.9 times out of 10, I am, I'm using no, if I say 9 times out of 10, that's 90%. If I say 9,999 times out of 10,000, that's a better representation, right? But yeah, I typically do market in the lower time frames. I usually don't market in the high time frames, but I just wanted to pick up some spot. And on the exchange, I'm not paying any fees. So I just incurred probably a little bit of slippage, but honestly, for the move I just got out of it, it was negligible. So it all depends, right? You can't do it if you're transaction cost sensitive, but for the setup that I just had, we just got out of that, from, where was that, 3.9 all the way up to, we're looking at right now just over $1,000 move, right? So was it worth it? Yeah. And I also obviously acted with a little bit of what's it called? Sense of urgency, because I'm on the stream and it's hard to sort of do two things at once when you're streaming. So let me just go through the chat real quick. Oh yeah, the Green Knight was so bad. So the Green Knight, I'm not gonna spoil it, but I don't know. My wife and I saw the preview of it, and it looked like it was the kind of movie we would like, and I felt like I knew it was almost the end of the movie, and I was like, this does not feel like it was the preview at all. And I just thought it was, I don't know. I was waiting for like the aha at the end, or some kind of major, like it was a fable or something, some kind of major lesson or wonderful moment, but it just, I don't know, it didn't do it for me. So, I mean, I think at this point there's a bigger catalyst that's needed to send BTC lower. Bitcoin will break the all-time high again. I said, this is going back now 2 months ago. It's my pinned tweet. It's been on and off my pinned tweet because I'm like sharing this Fidenza and sharing the pinned tweet, but I think it's my pinned tweet now. But Bitcoin's going to continue to move up, I think. I don't think there's like a major top. I don't think we're close to it yet. I think there's obviously tops along the way that are part of a smaller cycles within a much larger grand cycle. Now, I think that it'll probably, so after a big sell-off like we had, you expect some type of big bounce no matter what, right? Since we took a while to have a large bounce, right? Since we actually ranged and had multiple moves towards the lows, and I got shit for, people think I called for like 20K. I never said anything like that, right? All I said was if we break 29, the first area I'm looking to is 27. I called for 29 like 4 times pretty boldly, and it came back down, or I called for the lows or new lows. But I think that the way that we moved sideways and then broke up is very bullish. I think that no matter what, we would always have come back up towards this area, and I'm saying that all the time. Like, no matter what, you're always going to have some type of larger mean reversion. Traders are going to get crowded to the downside. A lot of the market's going to be on the sidelines. There's going to be another rally regardless. If it was fast, right after the breakdown in May, I would be more prone to thinking that's an obvious sell. Now that we've moved sideways and put in this larger move, as I said many times before, I think that what we could expect is something that was similar along to this, right? I said we're probably going to, we're going to make a new all-time high again, but we could expect a longer-term accumulation period. And one thing that I've been saying forever is that this was probably an anomaly, right? The COVID anomaly, that this would have probably resolved to the upside regardless. I don't think we needed COVID to be where we are. I think it helped as a catalyst, but BTC, new asset class, right? Fixed supply, just over time, people buying it and dying it is enough to make it go up, right? Obviously, there's like 30 million, I think, of it that hits the market a day that has to be purchased, but it's a new asset class. Very rare that you get to buy into a new asset class or be around at the beginning of it at inception. So I never thought we were going to have anything less than a 6-digit BTC at some point. Now, how we break 50K, how we break the all-time highs. I said a while back, I said, I don't think we're going to have an all-time high before the end of 2021. It looks like we're making a very strong effort towards invalidating that idea. I don't care about that, right? Like, the idea is the idea. I'm never going to be taking trades based on something I said 2 months ago. Like, things changed. It's looking great now, 50K, it doesn't look like it's going to be too tough to break it, honestly, because we didn't have any kind of major kickback from it. It's not really shown itself to be an incredible level. So far, it's just got a little hot up at the high, obvious profit taking at an obvious level, good risk reward if you are selling. So you could expect some type of activity at this level that offered downside movement, or led to some type of movement to the downside. I drew that without you guys seeing anything. Okay, very cool. Let's go back to that. So what I was talking about was this, this being kind of an aberration. And this was likely, I think this area would have acted as support and we would have seen this move up regardless. My idea is that, you have a big move to the upside similar to this, right? We'll probably have, I think that, it's not out of the question if we come back down to if we came back down to the top side of the structure, it wouldn't be bearish still. As I've said, since way back now, after we broke above 40, I've been saying, even if you come back to this range and you it's muddy, the correction is like loose and, it's not very tight, but it's in this zone. Still, in my opinion, it would be setting up for a buy the dip. So yeah, I don't think it should take too much to break above the all-time high. I think it's going to take a little bit more time now. September's never really a good month. One sec. Where's the chat? Too many screens now. There we go. All those contracts, which ones? Options, that's Genesis volatility. And then I also look at Levitas. So Levitas, which I think means levity in Latin, or lightness. This is, let me go back to the screen. So Levitas, and Genesis volatility, and where else? This is BYBT, so it sounds like Bybit. Very useful websites, combination of futures and options positioning. Levitas has options as well, but it's not as comprehensive as Genesis. Where's the chat? Includes paid promotion. Yeah, we just have to say that we're partners with Phemex, so obviously, we make money from being partners with a major exchange. But I always say to people, when it comes to exchanges, use the exchange you're comfortable using, right? I use multiple exchanges, so I don't like sit here and say, oh my God, I only trade on on such and such exchange. So yeah, follow the path I drew. Spaceman. No, it's all good, man. If you want to help them out here and tell them how to get your indicators, I'm using it. His indicator, I'm advertising his indicator right now. I just updated. He updated it today. So I love it. It's great. I use XO too. Like, I use XO. Being a large account had its perks because I have access to all these things, sort of people give them to me to try out. But I use XO mainly for my footprint. Like, I kind of like having the profile right on TradingView because I have, on all my screens, I have a ton of charts up. I have, in my workflow, I'll have, a TradingView chart always up. I'll have either a 3 to 1 minute up, so that's where I'll have the profile open on. And then I'll have a daily or 4 hour on a different tab. I'm looking at the tape, I'm looking at the footprints, I'm looking at another profile with a longer period of time because when I'm looking at Spaceman's profile, I'm more zoomed in. Just so no matter where I look, I know exactly where we are, right? I could always be looking at a screen and know where we are in relation to any significant level. I never want to have to do like this when I'm making a decision to buy, right? I mean, you are kind of doing that, but I want to get as much from wherever I'm looking at the time, but also be able to have multiple things, right? So yeah, he is a great indicator. Oh yeah, I have to go back to Spaceman's thing because I think I don't know if I just moved it back, but this is his profile. I don't want to call any kind of legacy market correction. Like, people have been doing that forever. It just doesn't make sense to try to call it. Just expect it to continue to move up and protect yourself in the event that it moves down. I think at this point there's so much taper talk that I don't want to say taper is priced in because it's not, but I don't know. Honestly, I don't know. I think as long as tech and equities as a whole, I think as long as tech moves up, BTC will be all right. Tech obviously experiencing a little bit of issues the last week, but I mean, if we go to something like Koifin's a great site. And then I'll just get rid of some of these just to show you tech. Tech's, I mean, always been something you bet on. It's like not betting on technology is probably one of the dumbest things to do if you have access to a market where you can. But for the last 5 days, obviously for the last week, it's had some trouble. But the S&P, has as well, right? And the S&P is weighted obviously by the internals, right? Which tech is pretty heavy in that regard. As whatever Apple does, the S&P is. I'm more prone to, I would say, focus on Apple than the S&P. But yeah, I'm not like anticipating the S&P to do anything major right now. Like I'm not calling for any kind of major correction or, yeah. I don't think we have to worry about that yet. Yeah, BTC, crypto, it's like a higher beta tech. It is like a tech, right? And crypto will become more correlated to legacy when it's more sort of ingrained in legacy, right? So one of the reasons why crypto is not as correlated, even though it is, because it's enforced now by algos and funds and individual traders but acting on behalf of one doing the other, when one is doing something extreme, meaning, not talking about when Bitcoin's doing anything extreme, but when equities or tech is doing something like Tesla, MicroStrategy, if they do anything, Bitcoin will probably move with it. But, or at least that's an indication also of the amount of liquidity in the system and money sort of looking for yield. So if it's moving into tech, if equities are moving up, I wouldn't expect Bitcoin or crypto to suffer. But when crypto is like on the same platform as equities, like when you could trade on TD Ameritrade between crypto and stocks, then it'll be very correlated. So that's a reason why that's not like commonly spoken of. That's why legacy, it's one of the reasons why legacy is correlated is because you can very quickly get in and out of things, right? You can get very quickly on a brokerage platform, go from, the gold in your portfolio, the bonds in your portfolio, and the stocks in your portfolio, and very quickly influence and enforce any kind of relationships that exist. Crypto is disconnected, right? It's not as easy to do that. So anyway. All right, I think I'm going to wrap it up, though. It's, we're like an hour into the stream. I just want to do a late night stream. Hop on. And try to do these more frequently. I think that covers everything, right? Yeah, QQQ, right. So I look at the ES and QQQ. Nice move by BTC. All right, that's going to wrap it up. So, I mean, if we're able to find our footing right now above yesterday's value, I would say you could look towards 48.2, 48.4, as that confluence between weekly VWAP, those single prints, and a nice little shelf. That being said, I'd probably expect a little bit more development so far in this drive, right? We are, we're an hour into the day right now? Into the session, hold on. Yeah, 2 hours into the session. Or 1 hour into the session, sorry. And it's been just a drive off of it's been a fake out to the upside, a drive down towards the low, and now back through the initial bounce, back through yesterday's value. I would anticipate that you're probably going to fill out a little bit more. So if we bring this back down for a sec. So, meaning I don't think that this profile is just going to leave these singles and we're going to have a much larger move up. If you had this move up from here, so let's say we're just going to make a straight shot right now towards 48.2, 48.4, this little pocket. Yeah, you probably have a short ahead of you, that should be pretty obvious, because it'd be very unlikely, I think, for us to develop that way, where you have a profile that just is extended like that off the lows. When there's really, it's not like, this move is again, it's kind of a squeeze. I would say it's a squeeze. I have to verify that by looking at open interest. But yeah, I think we'd end up filling this out. What would likely happen, come on, what the fuck? Can't get the top of this, because it's on the other screen. Like, where's the top of this screen? Or the window. What would likely happen, I think, would be that you'd probably develop like another balanced day down here. We'll see, right? I could see the argument right now for taking the long, though, as long as you hold the top side of this range. Just that now the squeeze came after the move down. So, I mean, holding the top side of this range right here, I think, is probably a little bit much to ask. Hold on. I mean, you're looking at the retest kind of right now, right? So, I mean, just to give you an idea of what the retest looked like on Bybit and FTX. Wow. A lot of buyers on FTX. So I trust FTX for direction. Although that is a lot of buying at these highs. What you really want to see is actually what you're seeing on Bybit, if anything, which is the selling right on the retest. So, significant move up. Okay. You have some trap buyers up here, an increase in open interest, but ultimately what you would want to see in any kind of, I say sold and hold, right? So move up, retesting the top side of that range, sell, and then price to maintain the level where we've had a good amount of aggressive selling come in. So you're looking at kind of right at these lows, extended to where most of that selling activity came in. So it's looking good. And FTX is buying, which, as I said, I think FTX is a pretty good signal. So we'll see. This looks like maybe this is the retest right here for that squeeze up to 48.2. And at that point, I think you're probably coming back down, though. I don't think you're just going to move up from there, but I don't know. Maybe we will. All right, that's it. Got to cut it. It's been good. Everyone have a fantastic night. I wish you a great weekend if